Hey there, it's Bram Kanstein, and in this episode of Bitcoin for Millennials, I'm joined by Smitty. He's an anonymous engineer with a PhD in material science and a Bitcoiner since 2021.
It's money you can't F with, something that you can't debase away.
He believes that Bitcoin represents a quantum leap in money technology and has analyzed its long-term adoption patterns to create the ultimate retirement guide based on his calculations.
What I hate to see is retire on 0.01, Bitcoin, and you look at the numbers here and you're sort of like an order of magnitude off.
If you want to know how to use Bitcoin to retire with 50K a year or even $1 million a year, then this episode is for you. If you find it valuable, please like this video on YouTube and subscribe here, or follow me on any of your favorite podcasting platforms. That will help me to reach more people and spread the message on Bitcoin even further. Thanks for your support. Thanks for watching. Now let's dive in. All right, Smitty, welcome to Bitcoin for Millennials.
Thanks for having me. Great to meet you, Bram. Good to be here.
Likewise. Well, thanks so much for coming on. You have gained some traction on X with your Bitcoin retirement guide. So we're going to dive into that today. But before we dive into the numbers, I'd love to learn a bit about, your current approach to Bitcoin with your expertise. Maybe you can share a bit about that, and also why you see Bitcoin as a superior quantum leap in money technology, which will solve the biggest economic problem for everyone. I saw that you talked about that, and I think it would be nice to get some background on you and why you have these thoughts around Bitcoin.
Absolutely. Yeah, appreciate it. Well, my background is not a financial analyst. I have an engineering and a science background. So for the last 10 years, I've actually been developing batteries. So I'm in a battery technology space, and I've got a lot of patents, and it used to be publishing papers, but I've been in industry for a while. And so this has been a calling that I sort of fell into, I would say, began around 2020. When the COVID catastrophe happened, and I started thinking about crypto really for the first time, and kind of went through that stereotypical arc of learning what Dogecoin is, also hearing about Bitcoin, doing a kind of a quick cycle through of what are all these things and why are people gambling with this stuff, and then I realized that one of these purports to solve some fundamental problems here, and as an engineer, I had never really asked that fundamental question of what is money, I think, and what is right and what is wrong about money, what should money be. And so I went back to the basics and asked those fundamentals of what are the core problems with the money system that we have today. And that, I basically was on a journey from that point forward. And I was very heavily into social media, reading a lot of the flagship books around this subject, like the Bitcoin Standard. So I started doing a lot of my own analysis. I started realizing I could analyze the data the same way I would analyze data in a physical system or something I was building. But then I started realizing how easy it was to do that with Bitcoin in particular. And then there were a few other steps beyond that, but eventually I discovered the power law and how elegant the data mapped onto that. And I was off to the races. And then I started to really become active myself on X, I think starting around about a year ago, actually. So I just started putting all of my own sort of analysis out there, and kind of there's a great community on X that I've sort of found kinship with, and I'm glad to have found that, because I think there's a lot of people asking a lot of the same questions.
Doing the study and eventually seeing Bitcoin as this quantum leap in money technology. Could you maybe elaborate a bit about that? Like, what made it click for you? And also, why do you think everyone should save and eventually retire with Bitcoin?
Yeah, well, I mean, it's money you can't F with, right? So to speak. And I think that all comes down to a couple of key attributes to what Bitcoin is, which is actually money, right? It's a unit of account with a supply cap. It's a fixed supply, something that you can't debase away for political reasons or other sorts of reasons. And it's also its ledger properties, right? It's a decentralized open source way that everybody who participates in the money system can verify what they have. And what what sorts of transactions they're doing with other people in the most objective way possible. So I think it's sort of an immaculate conception sort of thing. I like it. The analogy I like to use is for especially for lay people is like, imagine if everybody had access to the most perfect, immaculate accountant, right? And they handled everybody's ledgers and transactions with each other, and you could just participate with that, right? And everything was, you could look at the books yourself. What kind of value would you put on that as a global asset? And so that's sort of the semi-cheesy analogy I like to take with it. But yeah, I think those are sort of the three fundamental properties that it brings to the table that are a quantum leap, as you said, over gold and over, I guess, different various forms of paper money and fiat. So, yeah.
Yeah, and of course, the part that you can't F with it is what eventually gives you security, right, towards the future. I think Bitcoin is very predictable in that sense. I think that is also the promise of Bitcoin, is that it is predictable, right? So the fact that it basically just says every 10 minutes, I'm still the same. I still work the same. I added some entries into my ledger, but I'm still working in the same way, right? That is what gives people, what lowers uncertainty towards the future, which, from my perspective, is actually what gives you the use case for a superior savings technology, and eventually also, the best asset that you can use to retire with. And you mentioned the power law. In my previous episode, I had a really interesting deep dive with Stephen Perrineau, I think, whose work you're also familiar with, like a really deep mathematical dive into the power law, which at sometimes I had to really work to keep up, but it was fascinating. And yeah, you touched upon that, and I think what you've built with the retirement guide is kind of like a derivative or a tool, that's based on the insights that come from the power law. And from like the content that I see you put out, I think it's been a big influence on your thoughts about long-term growth and adoption, etc. Can you unpack that a little bit and kind of like share how you approach, eventually estimating? So the power law shows, the path basically, but we have ups and downs, right? We have peaks and bubbles. Can you kind of like unpack how you look at it? And I think that's your decay channel model. What is the basis of your retirement guide before we dive?
Yes. Yeah. Okay. Awesome. So first of all, Stephen Perrineau, I love his work. He's in a class of his own. Just amazing. For my work, so basically, I think at this point, and I'm relatively new to the game, but I would say I'm mostly known for two things. One thing is the retirement guide, which, as I think it's well put, that it's sort of a derivative on the power law, which I can get into. The decay channel model is something sort of separate. They're trying to model and characterize two different things, although they're both based on the power law. So the decay channel, which I'll talk about later, it's forming a channel. It's trying to find an upper and a lower bound for all of Bitcoin's price history and look at what that looks like going forward so that you can make some predictions. So it's doing its best to look at what the probability is for tops if we still have these cycles. So that's the decay channel. To get more into that, it's based on the power law. The retirement guide definitely is based on the power law. It is the fundamental backbone of the retirement guide that lets you play out these different scenarios based on your age, the year that you plan to retire, and it lets you sort of put in the assumption of what you think your annual expenditures will be, which can cover a broad range of different lifestyles and different countries, and even different currencies if you do the conversions. So the point of the retirement guide was to say, okay, here's what I think is the most reliable and also yet conservative approach to taking the data that we have with 95% accuracy. By the way, this has been 95% accurate projecting out since late 2015, 2016. So there's a reason I believe so much in the power law, which I'm sure actually you guys covered with Stephen. But yeah, that's the basis of the power law. And so that projects out, and it assumes the power law behavior going forward sort of indefinitely, which if you've looked into scaling laws for networks and things like that, that's sort of the assumption, is that it keeps growing like a power law.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you.
And then it also assumes things about the growth rate of the money supply. So you can call that inflation, and it builds that into your annual drawdowns. So if you're $100,000 a year type of person, type of lifestyle, it adjusts that every year going forward. So it takes things in today's money. So if you because it's easy for people to imagine today, okay, I spend this much on my life overall. But what is that going to, everybody kind of says, well, this is going to completely change in 7 years and 20 years, 10 years. And so that's all accounted for in the model.
Yeah.
Yeah.
I think this is a very important thing to highlight, right? Because like the underlying idea of me doing this podcast for millennials is that I believe that there isn't really a retirement, right? If you currently think about, okay, if I need $100,000 or I want $100,000, right, in 30 years when I retire, people are kind of working towards having 100,000 units of dollars or euros or yen, pounds, but they're not really taking the debasement into account. And if it just continues as is, even with the 7%, right, after 30 years, you probably need 30 or 40% plus more units than you are currently working towards.
Exactly. Yep.
Just having that issue, right, or understanding that issue, I think should be a big signal for millennials to start looking for, okay, what are better ways to, mitigate this debasement, especially over a long time frame as 30 years. So I think it's really cool that that's integrated. Well, not only cool, I think it's necessary that it's integrated into this model. So I think that's very interesting. Why do you think this is a unique or a good tool for millennials to look at if they're planning a possible retirement with Bitcoin?
Well, originally I wanted to come up with something that was sort of, it had a lot of the basic, reasonable, universalizable assumptions built into it for maybe like the average person, while you could capture, it's what is a meaningful tuning knob on it is age, right? So people are kinds of ages and annual expenditures. But I was seeing a lot of content out there, Bram, that was just talking about retirement, but also in the same breath talking about retirement around this sort of idea of, all models are going to be broken and, Bitcoin's going to go to infinity, and this hyperbolic idea of, it's going to be millions of dollars, tens of millions of dollars in a very short time frame with very little sort of data attached to that. I think I was a little concerned that it was so detached from reality, and I completely understand the bullishness, right? So my view is that this model marries what I view as a very bullish model, which is a very explanatory model. It's been a very predictive model since 2016. The scaling factors around power laws make sense, and so it's intuitive, but it also happens to be conservative for a couple different reasons. I think that people should use this one, or it's a good idea. I'm not a financial advisor, but they should consider this approach, right? Because of the debasement rate, as you mentioned, the M2 supply is one. But also I used a specific version of the power law in this that prevents you from being so vulnerable to the volatility. That's actually a key part of this, right? So I use something called the 5th percentile power law model for the price data that we have so far in Bitcoin's history. And because the model is like 96% accurate, 95% accurate, the 5th percentile band makes it so that by definition, 95% of the data is above that line. And that's where all the volatility is, right? So anytime we start to go into a bubble, we start to see sort of the parabolic rises and then falls. Those are the 70, 80% downturns that people are so scared of and that people absolutely have been hurt by. And so what this does is it pretends that those don't even exist. It takes those into account, sets them aside. And this is basically following that bottom trend line where the bubbles don't exist. And it's still an amazing growth rate.
The power law eventually goes to the right and up, and so there's certain predictions. People can watch my episode with Steven to see, how he talks about eventually going to a $1 million Bitcoin price. But the point is more that I want to share is like, how can we explain to people that when we say, Bitcoin will go up forever, which maybe is a hyperbole, right? But for a long enough amount of time, it will in your lifetime, right? And that sounds, I think it's just, it sounds very salesy, right? Of course, we say it's going to go up. So you're talking about this 95% confidence level. That's of course, the retirement model that you've created. But when I talked to Steven about the power law, he mentions the R squared, which is like 0.98. Yes. It's almost 1, which from the understanding I have shows that the predictions towards the future are highly, I don't want to say reliable is a better word, right? Based on the numbers that we know from the past, basically, right? So it's this connection with this projection towards the future. Is there like how would you share with people that the number going up is actually a very predictable and reliable thing, and perhaps make it sound less salesy, if that makes sense?
Yeah, for sure. I don't know if you want to pull up the visuals, but I have 2 slides that are touched on that exact point, and I'll just kind of flip through to them. This is what sort of drew me into the world of analyzing Bitcoin data. And I spend most of my time just looking at the price. And there's so many different ways you can slice this and so many insights you can extract from this. I mean, it's just a beautiful data set, frankly. So, but if you look at this, what I did is I'm actually tracking the 5% power law line here. I call it the support line. So here I'm terming it the reliability of Bitcoin support line. Steven is dead on when he says that the R squared is the way that you can sort of measure the accuracy. It's the percent of the data that's explainable. The percent, of the data that's explainable by the model. And the power law is an incredibly simple, elegant model. And this is actually showing that all the model parameters that were used at the end of 2015 held up in nearly 100% between all the way up to today. So you see the blue dashed line and the orange line all the way up to June 2025 are indistinguishable when you lay them on top of each other, which is just incredible. So this is this is called an out of sample prediction test. So this is showing if we keep all the model parameters constant from that date and looking forward, they lay on top of each other. So that's one really good indicator of a strong reliability and the idea that it's going to continue going forward in the future. The other thing I like to track here is actually the R squared. So the bottom plot here is the R squared itself for all of Bitcoin's history using the power law. And then the scale of coefficient is basically that growth rate over time. And you can see that after about 2015, both of these parameters start to stabilize. And not only do they stabilize and flatline, but the R squared keeps going up and up and up and up. And I've actually been tracking that for the last year, and it's gone up by 0.3% or something like that. So it's trending towards, over 97% at this point. Yeah. So this is a thing that I use to verify to myself that this thing is it's becoming more resilient. And that's the nature of a power law. So
this is actually showing, especially the bottom graph, right? It's actually showing that the reliability of projecting towards the future is getting higher, which actually lowers the uncertainty around Bitcoin as an asset.
That's right.
In general, I would say. Yeah.
No, that's perfectly put. So that's where the confidence in the reliability of the data comes from.
I think it's not only like a qualitative research that you have to do for yourself, but you can actually see that there's a lot of quantitative data as well that supports the thesis of Bitcoin as a superior savings asset.
Yeah, and you talked earlier about those clicking points. So like, what are and I've had multiple of those, right? Where there's certain sort of breakthroughs in my mind where I've just gone even deeper in my conviction with it. And it's exactly what you said. It's all coming from the more quantitative side of things. So the digger I deep, the more of these sort of quantitative gold nuggets you find about that are just so fascinating. So,
yeah. All right. So if we get practical, your guide that I will link to, obviously, in the description, it includes charts and tables showing how much Bitcoin someone needs to retire at different ages and annual spending levels, like 100K a year, for example, which is on the screen now. I'll make it full screen in a second. So, for like a 30-year-old millennial listening right now who wants to retire in 2050 on, let's say, 150K a year, can you kind of like walk us through how they use your guide to figure out their Bitcoin stacking target? And just what do the numbers look like?
Well, this is Bitcoin for millennials. So this is very relevant. I'm a millennial myself. So actually, did you say retiring in 2050? Did I hear you right?
Yeah, let's do 150K, okay. 150K a year. So you have a slide with 150K, I think.
Let's use 35. So slightly, that's very close. So because it's, I have these in fives. So okay, age 35, and your goal is to retire in the year 2050.
Yeah, with 150K, if you have that one too, right?
And you have $100,000 a year living expenses, right? This is how much your lifestyle costs in 2025.
Yeah,
or we could jump around. But just to make, so 100,000, then you would be targeting 0.79 Bitcoin if you were planning to retire 25 years from now, which is a reasonable retirement age, right? Isn't that 60? So
yeah,
that's I think pretty bullish, right? Because that means today, yes, one Bitcoin is over $100,000, but you still have some time here, I think, especially over the next, your time window is diminishing, right? So it's going to be harder and harder to stack over time. Mm-hmm. But 0.79 is very achievable for a lot of people.
Yeah. So how we can read this, right, is basically, okay, if I'm 35, so I unfortunately I don't have a mouse that I can show up on the screen, right? But on the left column we see age 35. If I want to retire right now, like this year, I need 10.6 Bitcoin, right, to eventually retire until you mentioned that one of your assumptions in your guide is that people are planning to live to 100, which
everybody's dying at 100.
Yeah, so that's great. That gives your guide a very solid conservative approach. I would say. How do you think people should think about stacking Bitcoin today? Kind of like helping them understand why not to cash out during the next bull run if eventually your goal is to retire, right? So the number you just mentioned, the point, which one did you say? So point.
So 0.79. So if you're 35 and you want to retire at 60, you're right, and you want to at age 60, 25 years, that's 0.79.
Yeah.
And so you can look at the graph. If you're more, the reason I put this as a table on the bottom and a graph on the top is I find that people's minds are sort of inclined towards more visual, graphical, or more tabular. So in an earlier version, I used to just have the graph, and some people weren't totally happy with like, they're like, how do I read this thing? Some people it really clicks with. So I just put both. Now you have a lookup table as well. So the table directly corresponds to the graph. If you want to look at the graph, then all those dates, those years are the year that you want to retire, not your current age. And then the color of the graph goes from like a bright orange. You could be a little toddler in diapers. You could be age 5 all the way to age 75, from orange to black. So what you do is just find the line there, and there's only like 8 of them. So you can count to which one is closest to your age, and then follow that down the slope.
Yeah.
And then look to the left axis, and it's everywhere between 0.01, 0.11 to 10 sort of thing.
Yeah. And so if we then move up, right? So if we go, so we have the 0.79 retiring in 2050 as someone who is 35 years old right now. If we move to 150K a year, and then maybe even 200, can we kind of show the difference in stacking?
Yeah, can we jump to 200? I didn't include every single one on my PDF here. So
let's do 200.
We'll just double it. So it does relatively linearly scale. So when you jump to the different expense amounts. So if you're now a 35-year-old and you have a more expensive lifestyle, or you have a family that, or whatever it is that you're anticipating, double that amount of expense per year, then you're looking at 1.6 Bitcoin saved up by 2050 to retire with that amount, of expenditure.
Maybe this is a nice also slide to kind of talk about, because the interesting part here, I think, is that 1.59 Bitcoin is, at current prices, like $165,000 in total, which is obviously a lot of money. But if you understand that you can actually retire off this at 60, mind you, then I think I'm thinking of something that I've said a lot, but I don't think I've seen it like shown in practice, which I think is shown in practice on here. Is kind of like, with Bitcoin, you are sending economic value to the future, right? So once you understand that Bitcoin will go up in value, because slowly, one by one, more and more people will figure out that Bitcoin is a superior savings technology, and wealth that is stored in other assets like real estate, homes, sneakers, cars, bonds, wherever, will slowly go into Bitcoin. And over time, that will make, Bitcoin's value go up. If you acquire Bitcoin today, and that there will be not only less supply, so more supply will be locked up by people that are long-term holders, but also, the issuance of new Bitcoin will go down over time. So the amount of Bitcoin that you can acquire today, once you understand that appreciates towards the future,
yes,
it also slowly becomes clear that if you buy $160,000 worth of Bitcoin today, that in 25 years could be your entire retirement, which I don't know if you have the number, but let's say if you live from 60 to 100, well, that's 40 times 200K a year here, which is 8 million, right? So in that sense, $160,000 acquisition of Bitcoin today could amount to $8 million in a retirement fund.
Yeah, and I think that's why this guide is, and I think that generally the story of the power law explaining the growth path of the price, we know it's going to be getting extremely more expensive in the future, right? Which is part of the reason that we're looking at this seriously as the basis of our retirement. But what that means is two things. It's an extremely important and asymmetric bet for millennials looking to stack something for retirement now. But there is such a thing as eventually there's going to be diminishing returns. The price is going to be very high, but their opportunity, in these working years as a millennial, I think are extremely, especially the next 10 years, are going to be an extremely important and crucial stacking opportunity for them. And then they're going to be in a class of their own. They're going to be, even if they, by the way, this is a stacking goal, right? I think it's a good starting point, but my general thesis is that people should be I mean, look at the Kelly criterion that you were talking about with Stephen. There's good justification to be. People can do it different ways, but I would, save in Bitcoin, save and stack as much as you possibly can in Bitcoin, because 10 years from now, it's going to be over $1 million. I think we all know that. And then 10 years beyond that, we're looking at this sort of 1050 time frame. The price of Bitcoin is going to be, I don't remember the exact number that year, but it's somewhere between 10 and $20 million, which is kind of mind blowing to think about. Now, in real terms, that's going to be some percentage, whatever, 20% of that. But it's not going to make it any easier to stack Bitcoin in those later years. So there's a really optimistic outlook here. If you are young and you're a millennial, you still have a lot of time on your side, but you have a bit of a window. So be aggressive and plan accordingly. And I think this is a good, reasonable way to do that planning, and not to. What I hate to see is retire on 0.01, Bitcoin, and you look at the numbers here, which is based on what the data says, and you're sort of like an order of magnitude off. Which is as amazing as Bitcoin is, right? You're not going to find anybody more bullish on Bitcoin than me, but you just don't have enough, and it's not smart to plan around those sorts of numbers.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read. And it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. Yeah. Well, if we look at the graph, well, if you're 55 and you want to retire in 40 years, then you need 0.18, right? So, I think it's good to emphasize here that that is amazing hopium, but not something that is rooted in the, I don't want to say mathematical reality, but at least in the mathematical models that people are working on, and something that we're seeing here. Right. You mentioned before, I don't know if you have a slide about this, but you mentioned before that, of course, you assume a 7% annual inflation rate, which is, of course, a big concern for people that want to find the best way to save their wealth and grow their wealth towards the future. Right. Can you maybe explain how you account for it, or is that just what you said already about, that it's just in your model's calculation, you're just taking that into account when you're projecting over the future years?
I didn't put a slide in this PDF, but I have something on my Twitter, on my X, whatever, from a few months ago, which is pretty much just plotting the M2 money supply growth over time in dollars. And you fit the whole thing. It's an exponential function, so it's not a power law function, but it's been going on for a very, very long time, but and there's been fluctuations, but the average is pretty predictable, with a pretty high accuracy over the long time frame. And it turns out to be about 7%.
Yeah.
So the M2 money supply itself isn't built into this retirement guide, but it's what it does is it adjusts upward. So if you start at $200,000 a year, right, in year 2035, say you want to retire in 2035, all the time between today and 2035, before you actually even start your retirement in 2035, it increases that $200,000 every year for 10 years at 7%.
Yeah,
right?
Exactly. Yeah.
And then it keeps doing that all the way until you kick the bucket at age 100. Yeah.
Yeah. What I love about this guide is that it makes your stacking goals very practical, right? So if you are 35 and you actually want to retire in 10 years, you need 4.81 Bitcoin.
Or half of that. So it could be for a lot of people 2.4, just depending on sort of, there's people in other countries. I tend to be very US centric, because of my bias being here, but I know that it doesn't take as much in other places in the world. So,
yeah. So to be clear, the 2.41, for example, in 2035 for a 35-year-old is the amount of Bitcoin you need to have in 2035.
Correct.
Right? So
that's right.
That gives you a 10-year window to acquire 2.4 Bitcoin, basically.
Yep. That's exactly right. And also keep in mind, this doesn't account for any other sorts of assets that a person might have, of course. So this is based on a scenario where somebody has only Bitcoin as all of their financial assets and nothing else. And their simplified plan is to just live on their Bitcoin until age 100, which I wouldn't even necessarily. I know, of course, and then it's also not accounting for the tools that people could use for, Bitcoin-backed loans and bonds and things like other ways that you might be able to work this without actually having to spend down your stack.
Yeah.
So, right.
And so that is the practical part here is, right, if you have this, let's say the 2.41 in 2035 as a 35-year-old, you can retire and you're basically selling 100K equivalent of Bitcoin every year to fund your life, right? So that is the underlying part here. Yeah, why do you think Bitcoin is a better asset than any other traditional assets like real estate or stocks to preserving wealth? You just touched upon it, right? Like this is for 100% Bitcoin allocation. What are your thoughts on that? Why should people move towards Bitcoin for this?
Oh man, a lot of reasons. I think we hit on a couple of the fundamental properties that I just think it's the fundamental value proposition of it. I think is a good reason to consider it as, back in ancient Rome when or other countries, gold was sort of demonetizing silver in certain scenarios. It's sort of you're seeing this transition happen is one way to look at it. Another way to look at it is we're seeing a growth trend that's sort of akin to the way that the internet came about, and we're still very early along that adoption curve, right? I think conservatively, people are estimating we're at like 3 or 4% adoption globally. I don't even know if we're at that. Some of those that number sounds even a little high to me. You're getting in with a ton of alpha, right? You've got a lot of great analysts that are giving you good reason to trust the reliability of it. You can hold this yourself, if you're different parts of the country or in countries where safety is a concern and security is a concern. This is something that can be moved across borders, just like the stuff Saylor kind of says. You can be moved across borders without any sort of physical burden or political burden. And I think that just the growth potential itself, right? I think that it's an unparalleled asset in terms of it's still doing a 4-year average CAGR of like 42%. It's going to continue on that trend. It's going to diminish, like we talked about, over the coming decades, but that's what it's doing now, and it's going to be doing well over 20% in another 10 to 15 years, which is still around 3 times what the inflation rate is. So it's like, there's maybe a bag of good reasons right there.
Yeah. I think another important thing to highlight is that, if you are, let's stick with the 35-year-old example, right, in this table, the fact that it will be harder in the future to acquire a certain amount of Bitcoin because the price will just slowly run away from basically 99% of people, including us, seeing that I don't want to say only, but 2.41 Bitcoin is not 20 Bitcoin, right? Or
That's
even
right,
when you want to retire a bit later, let's say in 2045, right? So in 20 years, when you're 55, you need just over 1 Bitcoin to retire at 100K a year. So the fact that that is the 1 Bitcoin, the holy grail in some sense, right? You see that if you achieve that, you can actually retire early. And
yes.
I think this is just a really interesting signal for anyone who's listening right now. This is why you need to either work your ass off or transform any other assets you have into Bitcoin if you are following this reasoning and the math, etc. Because this is the opportunity window that people still have, because we know that the price is going to run away, right? So it's going to get increasingly harder to, well, not only accumulate, but also I wanted to ask you about this as well, right? So HODLing is hard. I talked about this with Steven, right? You can understand the math and see where it's going, but you need a lot of patience. So you need understanding, you need to study, you have to build conviction based upon that study, and also and I think that's where this guide helps, right? Like have a stacking goal, or at least a certain minimum that you want to achieve in order to eventually achieve, whatever goal you have. But along the way, of course, Bitcoin's volatility is a big worry for a lot of people, especially when they think about, their retirement planning, because they're, planning over 10, 20, 30 years. You use a very conservative model to mitigate this, but yeah, how can we help people to understand how to manage this perceived risk, right? Volatility is not risk in these price dips, especially because they're planning for a long time. Is there a way for them, or how you would talk about that to help people mitigate that perceived risk, I would say?
Yeah, I think volatility needs to be seen in the long run, not as risk, especially when you have a 16-year data set for something like this, and you can see the volatility overlaid with the overall trend. Like, this is a unique perspective, and so you actually have these opportunities, right, to take massive advantage of temporary explosive exponential growth rates. But what I also try to hammer home is this idea of HODLing, right? So it turns out that Bitcoin spends about half of its time in these sort of crab crawl accumulation phases. So I'm showing a different graph here. So millennials, and again, I'm a millennial, right? We get this a bad rap for being lazy and eating avocado toast and things like that. But there's at least 50% of the time in Bitcoin's life you've had, and you will have, and arguably still you have time right now to accumulate during these phases and be able to reap the rewards of the same CAGR, the same growth rate as what the average trend line is doing. This is not the average. I'm showing here the lower 50th percentile, right? So anywhere between the 50th and the first percentile, so all the bottom data, that's where the accumulation phase is in terms of Wyckoff cycles. I like to call them crab walks, crab crawls. Half the data looks like this, right? And so I like to sort of take solace in the fact that I can buy 50% of the time when the data is along this accumulation phase. And in the future, the volatility is only going down. So the bubbles we're still experiencing high volatility compared to traditional assets, but over the next 10 and 20 years, and this is kind of where the decay channel model comes in, which I can transition into, but that's going to continue to diminish as the market cap grows and the asset matures. This is what happens. And they're going to have a much more stable, maybe around the time that they plan to retire, the volatility is going to be much less of a concern.
Yeah.
And so
what I love is the tension between, do I take action now and like stomach the volatility? Like, how much do I study to stomach the volatility to actually capitalize on the opportunity I have now? Or do I wait when the volatility is lower, my perceived risk is lower, but then the price is running away from me? So actually my opportunity is dwindling to eventually achieve, whatever the stacking goal is that someone has. And that just in general, I love that about Bitcoin, right? Like that's the asymmetric opportunity. Like how much
and what it means is for the and I think these kinds of this sort of perspective is empowering, right? Because now you can tell yourself how likely it is that you're actually in a bubble versus in an accumulation phase. And so if you're ever in a bubble, in this case, if you're a millennial trying to stack for retirement, anytime you're actually in a bubble, you're going to be at that time in a very, very favorable position in terms of when you bought in the past. But if you're in the accumulation phase, you're still going to be getting, that between 30 and 40% growth rate. So it's all, this helps empower those trying to embrace the HODLing mindset, which personally is, I think, the way to go. So this is the Decay channel model, which shows that top bound. And what this does is it takes all the historical bubbles and it takes the very tippy tops of the data and it fits. That's actually an exponential decay. I won't get deep into the math because it confuses people, but the exponential decay is happening with incredible precision. In fact, if you took the first three bubbles using this model and you tried to predict the fourth bubble in 2021, it came within like $3,000 or $4,000 of the top there.
Oh, wow.
And so now we're taking that and moving forward. And I'm not trying to make I don't like to do timing predictions because I think fundamentally liquidity cycles and political things and geopolitical things, there's nothing fundamentally that locks them into a tight 4-year cycle. That's kind of what it's been, a roughly 4-year cycle, but they're not exact. So this is more of an upper bound for what the bubble tops could be deep into the future. So this goes all the way out to 2041. So what I did was I turned this into an oscillator, which I try to update semi-periodically. I made some code changes recently, but this is the percent difference, right? The normalized percent difference between that upper and lower bound here. And I make a cool video out of it too. It plots it, has music and everything. But right now we're about 40% charged. I'm a battery guy, so let's say about 40% charged. So in terms of, are we in the accumulation phase? Not exactly. We're in kind of a weird crab crawl right now. But every cycle that we've had, we've jumped to darn near 100% in terms of these parabolic moves, and we have not seen that yet. So the liquidity still has not happened yet. So this is, I would still argue, a good accumulation period. And this is actually, I think, a more intuitive view of what the rest of 2025 and into 2026 even could look like. So I kind of have this range here, this top zone. What this model is going to tell us that we theoretically have a high probability of moving into once we get into the full bull cycle mode. So that's the Decay channel.
Nice. Yeah, I think this is very practical. So, people like numbers. So, what you've highlighted here, this area is between 200 and 240-ish something, right?
Yep.
That is when we would be oscillating at that higher level. I think people would be very interested to follow that indicator. Also, the one on the previous slide. So, for people listening, go follow Smitty and see if he publishes this. I think this is very interesting and also helps people to plan, right? Either their accumulation or if people are trading, which I'm definitely not doing. They
right, or DCAing or whatever. Right.
Exactly. Yeah. Are there any caveats to your model that you think are important to mention? You mentioned that the guide doesn't really account for like taxes and stuff like that. I mean, it's also dependent on the geographical location of people. Are there any other things that people should think about that you think are important?
Absolutely. That's so if you go to that, I have a post where if you just look at my page, just look up Retirement Guide ebook edition. That's the most recent version. I tried to make it like a booklet almost where people could print it out. But yeah, I guess that's the last important call out, which is a big assumption. But there's so many different tax laws, depending on where people live, that it's hard to just have an average case that's going to apply to a wide range of people. So it's assuming that there will be no capital gains taxes on your stack. And so some people are like, whoa, that's not realistic at all. Well, then you got to take the numbers and you got to just basically build that in depending on your, whatever the laws are in the area that you live. I think that's just something that that is an assumption that I call out here. So that's a very, very good point.
Yeah.
I do think that because of game theory, and there's still some speculation around that, I think we're going to trend towards less taxes overall, just because of the sort of the game theory around it.
Yeah, maybe to wrap up, and I wanted to talk about, kind of like to inspire our audience, and maybe also to go back to your reason of creating this retirement guide. Can you kind of like paint a picture of what you think success might look like for a millennial who follows your guide? Maybe some sort of scenario that you thought about before for someone who starts stacking Bitcoin today and maybe can retire early in 20 years, for example. What does that look like?
Oh, yeah. Great question. So just really quickly, the reason that I put that guide together in the way that I did was I was actually inspired by my family. So I'm a millennial. I'm 36 years old. I've got family. I've got parents. I've got some surviving grandparents still. I've got kids. I hope to have grandkids one day. Family is extremely important to me. So, and people in the millennial bracket may or may not have kids or may not have those plans, but everybody sort of has their purpose, right? And their why in life in general. Maybe it's something around work. What I think would make a millennial successful in using this guide would be finding out what that is, and maybe you have, maybe you haven't, but find out whatever that is that gets you out of bed in the morning, that fulfills you as a person outside of the money side of the equation. And then figure out, what is the best way to sort of plan around what that future looks like and that future vision. And for me, I always sort of try to have a vision of the future for my family, right? What comes number one. And so for me, it's like, even though I'm a millennial who's supposed to be lazy and eats avocado toast, right, and wastes a lot of money, this for me is more motivation to actually work as hard as I possibly can, right, to be able to build that future for everybody that's close to me that I care about. That includes my kids, right? And that's part of the reason I had down to age 5 in there is I hope to pass some of this along to the future generations in my family. So let it be a motivator would be my sort of message. I think it's because you see two things, right? One, Bitcoin's $100,000. I'm never going to be able to stack enough to own one whole Bitcoin someday. Okay. Well, then some other people say you only need 0.01 Bitcoin to retire and live in a castle and, have endless riches forever. I like to see somewhere in the middle where there's an extremely bright future for your finances. If you think in terms of Bitcoin, you stack in Bitcoin, you do it aggressively for the next 10 years, but work hard and make sure that happens. That's sort of, yeah.
Love that. Thanks for sharing. And maybe you already gave the answer, but it ties into the last question that I ask everyone, which is, what is a core belief that you will never let go of?
A core belief is that you are what you spend time doing. Make sure that you're spending the time on the things that will shape who you want to be in the future. I think that's the most important thing. Every day counts.
Awesome, man. Well, I absolutely love that. And thank you so much for sharing, your insights on the guide that you created. I obviously will link to it in the show notes so everyone can check it out, and also follow you on X. So thanks again. I really enjoyed it and appreciate your time. Thank you.
Thank you so much. Great being here.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode.